Almost 200 years ago, an English statesman called Sir Stamford Raffles set foot in Singapore not far from the spot where I'm standing. In those days, it was a sleepy backwater of 1,000 people. In a few short years after that, Singapore built itself up as a major trading hub for rubber, tin, gold, and even opium from India. The Second World War put a stop to that, and in the decades that followed, Hong Kong built itself up as a serious rival, overshadowing Singapore. But, as these gleaming skyscrapers behind me show, Singapore is on a mission to build itself up once again as an Asian commodities hub. Not just as an Asian commodities hub, but the Asian hub in the Asia-Pacific region.
If you consider the history of Singapore as a commodities trading hub, this is sort of long established. This was the strategic foundation of Singapore. It is now today the largest bunker port in the world, the second largest, I think, container port in the world, and it sits very strategically atop some of the busiest shipping lanes in the world, and it's a natural place to facilitate trade between sort of major commodity producing countries such as Indonesia, Australia, Malaysia, and the sort of large Asian consumers of commodities in North and South Asia.
Industry executives estimate Singapore handles about 15% of the world's physical crude oil trading, ranking fourth after Geneva, London, and a combined New York and Houston. But Singapore is hoping to climb up the league table by luring big commodity trading companies with the offer of low corporate tax rates, as low as 5% in some cases, an abundance of legal and business services, and an increasingly attractive expat lifestyle. So far, the number of traders employed in the physical commodities sector increased last year by 17% to 12,000, according to the Singapore government.
Now, looking at the commodities trading market from Singapore offers three distinct advantages. First of all, of course, Singapore being a strong hub in Asia, not just for tax reasons, but I think a lot of producers and a lot of commodity traders have realized they need to be close to the ground, not just where things are produced in Australia, but also where things are produced in Indonesia. Indonesia being the world's largest thermal coal exporter, Indonesia being the world's largest crude palm oil exporter. But also in terms of demand, you've got three of the four largest, most populated countries. Here you've got China, India, and Indonesia. A lot of the miners, a lot of the plantation companies need to be close to their customers.
Yet Singapore faces competition from two Chinese cities with equally big ambitions, Hong Kong and Shanghai. Traders say they are not yet interested in moving to Shanghai in great numbers, partly because China's legal system is undeveloped. But experts reckon Singapore has a window of about 5 to 7 years to build up critical mass before Shanghai is ready to take them on. Hong Kong could yet leapfrog Singapore in metals trading if it wins a bid battle for the London Metal Exchange, which could be decided in a matter of weeks. There are also concerns that China's slowing growth rate could have a dampening effect on Singapore, although some economists are less pessimistic.
We see this slowdown as temporary because China has just entered a crucial leadership transition phase in campaigning mode, and I think we should see more clarity on the type of works that they want to build out in the next 4 years once we pass this leadership transition phase in October.
So far, there are no signs that Singapore's ambitions have been scaled back, even as the Eurozone crisis continues to grip the minds of investors. The signs, of course, are behind me with the cranes, indicating that construction is still moving on apace. What is certain, though, is that Sir Stamford Raffles would certainly not have recognized the spot where I'm now standing. In his day, this would have been sea, and it is now, of course, reclaimed land. Who knows, in 5 years' time, we might find the next big trading company placing its headquarters on this stretch of land. Let's just see. Jeremy Grant, Financial Times, Singapore.